seek out some guys who have the experience. When you're talking about real estate in particular, go try to do a small syndication with some friends. Get your feet wet, start building your resume. I think experience in this industry we're talking about is probably the number one bulletproof method.
Welcome to the Bulletproof Cashflow podcast. Let's get into the show.
Hey everyone, this is Augustino. The ability to protect your wealth in good times and in bad comes in defining a wealth management strategy up front and then execute on that strategy. When you do it properly, it keeps you from wiping out and losing everything. Well, today's guest understands how to build and secure wealth even during turbulent times like we have today. Now, as a co-founder and managing member at Red Fox Capital, he brings over 20 years of experience challenging the typical financial advisor to think beyond conventional investment advice. His clients experience innovative approach to building generational wealth and tax strategies through his innovative integrated asset management investment philosophy. He is the author of the best-selling book, The Real Prospective Investment Secrets of Your Financial Advisor Won't Tell You. Now, in the book, he shares the strategies to build retirement income and wealth while lowering your taxes. Now, with all that, I'd like to welcome Michael Brown to the show. Michael, thanks for coming on, man.
Thanks a lot. I appreciate it. Looking forward to it.
Yeah, I think it's going to be awesome. Now, if you like what Michael has to say, you can reach him via his website at redfoxcapital.co. And if you like our content, please don't forget to leave a comment and rate the show. It helps us out tremendously when you do. Finally, if you text the word freedom to 202-410-4202, you'll get our free ebook, The Bulletproof Guide to Finding a Broker. Okay, Michael, go ahead and tell listeners a little bit about how you got your start with creating tax strategies and helping people out in that way.
Well, absolutely. So I've been involved in, investing and starting businesses and companies pretty much my entire life, even started as a kid. And I had always wanted to get into the commercial real estate side and had an opportunity just out of school and decided to take it, had a great apprenticeship, learned everything from real estate development, brokerage work, investment side. And as we ended up growing that business, we really brought in more of a wealth management perspective because we started to see a natural conflict between the status quo financial advisors out there making recommendations to their clients. And so we kind of brought it all under the same roof, and it's been a great hit.
Excellent. Great. So now tell me a little bit about the type of client then you're working with. Like, are they typically real estate people, real estate entrepreneurs? Is that typically your bread and butter then?
It's kind of how we started. There has been kind of a clear distinction between a lot of guys who don't want to be on the Wall Street scene at all and put all their cash and all their savings into real estate. But we've been able to kind of open the eyes to a lot of new investors who really, thought real estate was more of a landlord, hold your hand, a lot of work, sweat equity, and show them there's different ways to invest in real estate.
Yeah. Well, I think that's probably been the bulk of the exposure that many people have had from when they were kids. I mean, that's what I was exposed to anyway.
Right.
I think as a young adolescent, my parents, they had a duplex. They had one guy living in the back. We were the mean, nasty landlords, that kind of thing. But I mean, that really didn't seep in as a way to get that passive income. And I didn't really discover syndication and the complexities of syndication either till later in life, right? And I think that's probably what you're referring to is the institutional style methodologies, I guess, for lack of a better term, of syndicating deals and building wealth that way. Would that be accurate?
Absolutely. I think, a lot of times our clients, don't really know how to get to a syndication model, to invest in one of those type of models. When, like I call the status quo financial advisor, if a client goes to that advisor and says, "Hey, I want to be exposed to commercial real estate," usually the go-to there is to put them in a real estate investment trust, REIT stock, which correlates directly with the stock market. So you're really not getting the benefit out of what you're exposed to do. So, we're trying to get out there and tell people that, look, you can get into these private real estate deals. You just need to know where to look and understand enough about the process and how to do your due diligence to put yourself in the right position.
Yeah. Yeah. Well, and that's the thing. I mean, but part of it too, though, does it come in educating people then? I mean, because I would imagine that many people are more familiar with doing the smaller deals, the flipping, all that fun stuff, but they're not familiar with syndication. I mean, do you find that those people are open-minded about getting into syndication in the first place, or are they typically like, I don't want to hear it, I'd rather just invest in other things? I mean, what'd you find?
No, I find people are really open minded to it once you explain, how you're going about it. It's like, one person, an old mentor of mine, described it as if you buy an airplane ticket, you are in a syndication business. We're all together. We're all splitting the fuel, the pilot's expense to get to a point, and we're diversifying our risk at the same time. So I think it's just about explaining it and showing the end results, and people get pretty excited.
Right, right. But they don't get any equity. That's the key, right?
Yeah,
They don't get to own the plane afterwards,
that's right.
which is
That'd be a
very,
nice
very
deal.
unfortunate.
Absolutely.
Yeah, that'd be a good deal. That would
Yes.
be a very, very good deal. But yes, absolutely. So tell us about your approach then. I know that you covered it in your book, but
Yeah.
tell us a little bit more. What is the approach all about, and what does it mean to your clients?
Right, absolutely. So, we track, starting now, most of our clients were high net worth individuals, obviously accredited. So they had typically, you make $200,000 a year, had $1 million net worth. And, we started tracking, where the wealthy are putting their dollars. And we started seeing a direct correlation with commercial real estate. And typically, as one's net worth got higher, their allocation to commercial real estate got higher. So we're like, what if we could step back here and maybe, introduce this to some lower net worth clients? You don't have to have $10 million to implement such a strategy. And putting commercial real estate into a portfolio, we've seen clients, take their returns 3 to 5 times. So our approach, which has been called integrative asset management, I call it integrative portfolio management, is where we take a traditional financial plan, traditional investment portfolio, and look at the suitability of the particular client, and depending on what their ultimate goals might be, and look at where we can take commercial real estate and put a piece of that. So you know if you had a net worth, let's say of 1 million to 3 million, typically you see a client with a real estate exposure about 20%. And I'd say it goes up higher there, depending on the person. But I think the key to this is that we're not giving out false information. We're not sending people away because, as a financial advisor, status quo, we're not afraid of really sending away our commissions or sending away assets under management because we all work together. So there's no conflict at all when we do our plans.
Huh. That's very interesting
Yeah,
because for most, well, I guess financial advisors anyway, what they're trying to do is they're trying to steer people away from real estate because they don't get any money off of it, and they're trying to get them into other vehicles like mutual funds and
correct.
stocks and whatever. So, which I think it does people a huge disservice, but in my opinion, but it's just my opinion. I mean, you don't get to, for someone who's well off, they don't get to enjoy all of the huge benefits they get with real estate if they go to the wrong guy. But really, you're not really doing anything like that. You're trying to figure out what's best for that specific client, and that's remarkable. That's awesome.
Well, one thing to note there, is I worked at Merrill Lynch in the past, and if I mentioned commercial real estate to a client, that would be concerned. That would be what they call selling away, and you'd be fired on the spot. So we weren't even
Wow.
allowed to expose our clients to these other assets if they weren't part of the financial advisory firm that you're working with. You cannot even talk about it to your clients. And I
I
thought
mean,
that was a disservice, and that's the reason I quit.
that's terrible, and they still do that today
They
too.
do.
I would imagine,
They
right?
do. Absolutely.
I mean, I actually met some guys from Merrill Lynch some time ago, and towards the end of our discussion, just meet and greet type scenario, and towards the end of our discussion, they're like, if you think about it, we're really just competitors, aren't we? And I'm like, I guess, man. I mean, I just, there's a lot of money out there. I'm not really that worried about it, but I mean,
Yeah.
for some people, they want to put their money in mutual funds. They want to put it in real estate. They want to do both. I personally have everything I got is in real estate. Everything is in real estate.
Yeah.
So it's like, that's just how I do things. Right. But to me, huge disservice from people. It's
It
ridiculous.
really is. That's one of the really motivating factors I had in setting up our company the way we do. It's a disservice to clients, and most clients don't know. The typical financial advisor says, "I've got you completely diversified, no worries," but all they mean is we're diversified in Wall Street products. And if there's a market correction, guess what? Your entire account's exposed.
Yeah. Yeah. Well, and then, and not to mention too, it's they're getting their fee off of that as well, right?
Absolutely.
So don't worry about it. I'm still collecting my fees, so it's
Hey,
okay.
absolutely.
It's it's front loaded, it's back loaded, it's all kinds of fees on top of it. Oh yeah, it's gonna be
Absolutely.
awesome.
You
Yeah,
got it.
yeah, it's ridiculous. So now tell us how you apply your plan then, your philosophy to protect people's wealth during downturns, right? So, obviously at the time of this recording, we're in this downturn that's going on right now.
Yeah.
How do you protect your clients' cash with what's going on?
Well, it's to give out just blanket advice is kind of dangerous.
Yeah,
Obviously, suitability for each individual client depends on their age, their net worth, what they're trying to, get, the next 10, 20 years, if they even have that. So, depending on where they are, on the financial wealth side, you have to look at all products. Yes, you should have some Wall Street exposure. We're never saying you should not. But you also should bring in some fixed income products, whether that be some type of an annuity or a life insurance product. I know a lot of the real estate guys, I don't know if you are, but we like to explain universal index life policies, what they call the private banking, where you can set up a policy, build up your cash reserves, but then you'll be able to pull it out and invest in other real estate projects. Use your own money, um, and then the real estate component. And when you go into the commercial real estate component, I had a guy the other day say, "Well, isn't real estate in a horrible position?" Like, yeah, but look, commercial real estate is not just one flavor. We've got all kinds of asset classifications inside commercial real estate. So, right now, we're looking at triple net deals with strong corporate lease guarantees, and that are just simply cash cows. A lot of our clients and investors now want a dividend check on a regular basis. So we've had to maneuver to those situations. If we want to put people into a larger upside with growth trajectory, then we may do a value add or even a new ground up development. It just depends on the individual and where we are in the cycle.
Yeah, excellent. I mean, it's funny because I'm doing both those projects right now. So
Okay.
I'm still buying those big deals, the typical C class, B class value add type scenarios. But we're also doing redevelopment. We're doing a ground up development. Hopefully here soon. We're talking to a group tomorrow about it, and then setting up a fund to do triple net as well.
Yeah.
So just as you described, for all those reasons, right? Those different products will give investors that follow us anyway the ability to get into different vehicles to help build and protect their wealth. It's absolutely beautiful.
Right.
It's good stuff.
Absolutely.
Yeah.
I'd say, one of the scary, asset classes that we've been kind of bearish on for a while is just general office that, just, especially with COVID getting hit. I mean, unless you need a destination office, such as medical office example, but the general office space is something we are staying away from right now.
Yeah, yeah, yeah. I mean, I think that, and that's the key, right? I mean, there's generational changes that's taken place, and they're going to continue to change, and people just aren't working at an office anymore,
Right.
right? Or not as many anyway, right? So even in the building that we're doing right now, there's 2 floors of office, but it's only because there's a courthouse across the street and the attorney's in a place to rent.
Yeah,
That's the only reason.
absolutely.
It's
Yes,
the only reason.
very
Yeah.
typical.
Yeah. So now in your case then, when you're doing these triple net offerings, so to speak, now are you putting these deals together? Or are you partnering up with like a syndicator that you know or and trust?
Well, my partner, my business partner at Red Fox Capital, handles all the day to day on that, and I handle the wealth management side. So we go through the syndication ourselves, and then we raise the capital through investors and put it together. So one of our strategies is we collect a lot of these smaller triple net deals, package them for so like an institutional buyer, family office, for example, may want to acquire it because it's nice and easy, wrapped up with a bow on top, and we can drive our cap rates to reward our investors.
Oh, okay, got it. So you're not you're just doing one offs then right now, or do you have a fund set up for
We
the
do,
acquisition side?
we do have a fund set up for the
Okay.
acquisition side. Yes.
Okay. Good. Yeah. 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 That's similar to how we do. I think most guys do it that way, right? They set up the fund, and they just capitalize it, and they just start buying these things up because
Right.
you never know when they're going to show up. But
Exactly.
that's the key thing. Yeah.
Exactly.
Yeah. Yeah. And I'm sure you cannot only buy one triple net. You have to buy a bunch of them.
You do.
They're like buying single family homes almost.
Yes. And you got to get a bunch of them in there because I mean, the margins, are really thin back to us, like the operator. So, you have to build a lot there. And then I think, our exit strategy is if you have a nice size portfolio that's stabilized, and if one or two may not do as well, you're going to overall look great.
Right. Right. And when you say that not do as well, you're talking like maybe they, I don't know, maybe they move out, maybe the lease is up, that kind of thing.
Yeah, I look at, we always have to look at all the worst case scenarios.
Yeah.
If a lease is not renewed, or if there's a default or something happens, in the COVID era, you always have to prepare for the crazy, unexpected.
Yeah. That's probably the safe thing to do these
Yeah,
days.
absolutely.
It's ridiculous. It's just
Yeah, it
ridiculous.
is.
All right. Awesome. So now you guys are doing redevelopment and development deals as well?
We have in the past. We have not done any new construction, any new development lately, due to the land prices where we are astronomical, and just getting capital for new construction is tough. It's a different type investor that doesn't want to return back right away. The money's going to be dead until you get the property up and stabilized. So we've kind of just stayed out of it. And the simple reason is our investors prefer income producing dividend in the check, in the mail.
Well, I mean,
Yeah.
when you can offer a triple net type deal, why not? I mean,
Right.
sure, the return may not be as rich
Right.
as a triple net or as a ground up or a redevelopment type deal, but at least you are producing that steady income, and that's ultimately what people are looking for, especially in downturns like this, right? I mean, in
Right.
this type of scenario, it's can be very tough for people
And
to keep that cash flow rolling.
the other thing is, typically your investors, that have enough net worth to invest in a new development, they're later in their years. And, it may take 10 years to get a new development project up through the entitlement process, leased up, and hand them the keys and start producing some kind of income. And they're like, I don't really have 10 years to sit here and wait on this. So that's also been a deterrent for a lot of our new development.
Yeah, yeah. Do you see yourself getting into new development in the future then?
Probably not. Nothing anytime soon. Maybe just repositioning. I've been through now two downturns in development, and it's a tough business, especially for a small operator with all the institutional capital involved now in new development. It's really tough.
Yeah. I mean, there's so much money that's going on
Right.
behind the scenes in some of these projects.
Yeah.
I mean, as a guy who's working on one of these big projects myself right now, it's like I knew that it was big. It's kind of like you're not really exposed to it, or you don't really fathom the size until you start working on it yourself. You're like, wow,
Yeah.
there's a lot of money back there.
I mean, we've had to put up, millions of dollars just in the entitlement phase. And we don't know if we're going to get a zoning, decision positive. We don't know what, our FAR, how many square feet we're going to be able to build on the property. That's all up in question in that first phase. And that's all at risk. And we would never put our investors in that stage of the game. It's too risky. So, we're writing the checks for that first phase entitlement planning stage. It's
But I mean, I would venture to guess though that you would know, depending on the area, how they're going to go one way or another, right? I mean, if you're in like Chicago or Los Angeles or even New York City, you're kind of like you don't really know. It's like a 50-50 chance. But if you're in a place like say in the Midwest where they've been known to give up their entitlements, you can probably have some idea, right? What are your thoughts around that?
correct. You hit the nail on the head. Depending on where you are, where we're located near the Washington D.C. area, it's probably one of the toughest environments to go through that entitlement phase. Um,
Mm,
we're in such a high growth market. It's become political, and it's a question mark every time we come into a city hall. Now you move Midwest or some areas more rural, where you can show some benefit maybe to the economic development of the area. You got a lot more leeway. But I would say in the DC metro area, it's a crapshoot.
right, right, and that's really too bad. I mean,
Yeah,
it's there's so much opportunity out there, but that's why, of course, I just buy where I live, and right now we're in Cleveland, so it's like we're just buying everything we can that makes sense. Not be stupid, overpay for things, and make sure that when you're doing those ground up developments, you can get everything you need to either make the deal work or abandon it altogether. That's
absolutely. Yeah, yeah,
but I guess that's the things that your clients are signing up for when you speak to them, right? You're getting out there, you're telling them, explaining to them these are the types of projects you're able to do. Obviously not maybe not the ground up anytime soon, but some of these other projects you're working on to help them protect their wealth, right? So now, aside from getting them into triple net and cash flowing deals, what other things do you do to help them protect their wealth aside from that?
yeah. So I think that's where the wealth management side of the company comes into play. It goes back, once again, looking at the client, finding out, what their situation is, and we know what their goals are. What are their retirement dreams, what we can do to help them. And we just reverse engineer it and, keep an open mind that we're not going to take your nest egg and put it into a managed portfolio like most of the brokerage advisory firms do. When I say that, I mean investment advisory. So, we'll step back. We like to, on the Wall Street side, I like to use tactical traded portfolios that not are just some vanilla type, well diversed fund, but actually guys in there that were making trades and taking advantage of the market. I think buy and hold strategies that we were all taught, as kids in the stock market just don't work anymore. You've got to trade, you got to take your profits and you got to take your losses and keep moving that money. Then we step back and look at, your qualified plans. I mean, what are you doing with a 401k? What do you have with an IRA? One big concern we have on the wealth management side is with the situation of our country now. We're in the lowest tax bracket, since really the inception of our country, and we think taxes are going to go up. We had during the FDR times we were at a 90% tax bracket. Right now, our highest tax bracket is at 37%, and I think we're going to be headed back up. And so, that being said, we've got to now protect people what they have now. So, if we can move people's 401k money into after tax money, now we have these lower tax environment. So we've been doing a lot of that recently. We've also been taking advantage of the CARES Act, the Coronavirus Stimulus CARES Act, where the government's allowing people to take out up to $100,000 in a 401k or an IRA without penalty. And then we can move that into an after tax vehicle, whether it be real estate, an annuity, a stock after tax stock portfolio, whatever it may be. what we always say is you want to tax uh, the seed, not the harvest. So let's get that money out and to work for you because the tax rates are going up. Just a couple strategies of many.
Now that after tax that you're referring to is basically that you're applying all the money. It's not getting taxed then, right? When you say after tax, it's getting taxed down the road, right?
Correct. So if you have, let's say, a traditional 401k plan, you're not paying taxes when you're putting that into it's, as our accountants all tell us, when you retire, you'll be in a lower tax bracket, which traditionally that may be the case. So you let all your growth grow inside the 401k vehicle. And then when you retire, when you take that money out, you're then taxed at that tax bracket in retirement. We don't think it's gonna we don't think it's gonna play out that way.
No.
So what we want you to do is take your money out of your 401k, pay the taxes now in this low tax environment, and then all your growth. Then you're not going to have a tax liability when you retire or anytime in the future.
Yeah. Well, I mean, but that's a sound strategy. I mean,
Yeah,
right now is the best time to do it.
absolutely.
But now it's interesting though. You think that taxes are going to go up. That doesn't matter who wins, right?
I don't think we have an option. We're what $27 trillion in debt now, with over another 100 trillion in unfunded liabilities. We're talking about another $1 trillion bailout package. Um, I just don't see how the country cannot not look at raising taxes.
Yeah. No, that's the scary part. I mean, do you think the United States is going to bust out?
I, it's a very treacherous landscape ahead of us, I believe.
Yeah. Yeah. No, I agree. I
Yeah.
agree. I mean, I certainly hope not.
Well,
I
I
don't think
do
it's going
too.
to bust out, but it's gonna get ugly. I think you're absolutely
I
right.
think I think we're definitely going to see a Wall Street correction. Looking back at the stock charts, typically a second term president bear market kicks in second quarter. So I think we have at least that to look forward to.
Right.
Not to mention all the other things on top of us. So there's going to be a correction, and like we like to tell people, I can help you, I can prevent things from happening to you, but after that does occur and I'm not involved, I can't fix it. So start looking at other options with your retirement money, with your investment money, and to hedge it with real estate, hedge it with these other avenues. I'm out there trying to preach that every day now.
No, but how are you reaching those people right now? So that's probably the toughest part, I would
It
imagine,
is.
right? I mean,
Right.
people they may not be real estate may not be in their purview. I know that when I was in corporate America, it certainly wasn't in mine for the same reasons we discussed earlier. It's like I had
Right.
no idea there was even an option, and even if I did hear from you, and I would have been like, what's this? I don't
Right.
want to hear about any of this stuff because we hadn't been trained
Right.
by our various HR groups that real estate was even an option. So now, how do you get through to
Well,
those people?
that's a really good question. The problem is everyone's indoctrinated and conditioned to
Yeah,
hear the status quo. So, people think you save your money, you put it in a 401k, and everything's going to be fine. But you can't expect to save 10% of your earnings for 20 years and live on that for 30 years. It doesn't work. So, I'm trying to get out there with the new book, which came out last week, and trying to educate anybody who will listen. And our mission over the next year is to rescue 100 clients from a traditional Wall Street financial advisory firm and introduce them to these new methods of protecting their wealth.
yeah,
So, doing that is through podcasts, writing the book, using social media. And, we were doing speaking tours, but unfortunately, COVID shut us down there. So it's got to adapt.
yeah, yeah. Well, and I think the same man. That's part of the toughest part out there is that trying to change the hearts and minds of
Yeah,
people that have been trapped in a system, right? It's a system of the Wall Street system.
right.
Not that I'm railing on Wall Street. I mean, I was
No,
one of those guys too,
yeah.
right? But it's like um, real estate offers so many tax benefits to protect your
Mhm,
money. It's unbelievable,
mhm.
unbelievable. It's just It's
Well,
insane.
I think one of the cool things that you can check out in my book is where I've laid it out. I laid out a portfolio, a traditional Wall Street portfolio, and I take it back and 20 years, so we get a real good perspective, and show you the returns against the S&P 500. And then we take two other scenarios where we take a 20% infusion of private commercial real estate and put it inside that portfolio. And then we run it with a higher 40% allocation of private real estate inside that S&P 500 portfolio. And when you can see those differences with real numbers, these are historical numbers, it will astonish you at the total return the investor is getting with less risk.
Yeah. But, of course, Merrill Lynch will never tell them that.
No, of course not. Well, it'd be illegal. They couldn't do it anyway if they wanted to.
Right. But man, I'm guessing that you guys have those charts, right? Because
We do.
you don't really have to worry about such things, and you're able to just give a very clear, a very understandable method of explaining to someone. Say, look, real estate is definitely where it's at. You're investing in a hard physical asset that actually exists, as opposed to trading one piece of paper for another piece of paper they have no control over.
Right. And the good thing is too that, when you come and talk with us, there are no conflicts of interest. I mean, if a client wants to be all in this bucket or in that bucket or divided how many ways into the different buckets, we're going to give them the fair and honest truth. We're a fiduciary. So, no one's paid on commissions or paid to point somewhere in a certain direction. The bottom line is to give the client the best outcome they can. So I think it's an awesome new way to approach financial planning.
Nice. All right, Michael. So for that person who's listening out there right now, and maybe they've been thinking about investing, maybe they've been thinking about seeing someone, maybe they've been thinking about buying your book. Who knows, right? But what is that one piece of bulletproof advice that you would give to that person?
I think for me and then the industry that you and I are talking about is it's experience. So maybe you don't have the experience right now. Seek out some guys who have the experience. When you're talking about real estate in particular, go try to do a small syndication with some friends. Get your feet wet, start building your resume. I think experience in this industry we're talking about is probably the number one bulletproof method. So if you don't have it, find somebody that you do. A lot of successful guys love to mentor new guys all day long. I like to mentor guys. Anybody who wants to learn, give me a call.
Oh, awesome! That's a big request. Hopefully, you don't get flooded with a lot of phone calls, man.
Yes,
they're coming for you. They're coming for you.
Absolutely.
Awesome, great. Well, now if you want to reach out to Michael, you can reach him via his website at redfoxcapital.co. Hope you got some insight on how to protect your wealth from the tax man, and of course, also some of the intricacies of how to handle a syndication. Thanks for tuning in, and I'll see you in the next episode.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast.